Technology, diversity, wine, the redwoods, and everything in between. Welcome to the Northern California Bay Area, and one show takes you inside the real estate that makes it all happen. This is By the Bay.
What's up, everyone? Dan Ancheta back here with another episode of By the Bay. Thanks for joining us again. Hopefully you're joining us on one of the wonderful podcast apps or watching us on YouTube. Really appreciate you all joining us again. Today, I have a really special guest. His name is Rich Stefani, longtime friend and someone I've referred a lot of business with over the years. Rich is the vice president. Is that the title?
Senior vice
Wow,
enough.
even more. Senior vice president at Harvest Business Finance, which is a non-bank SBA lender based out of Laguna Hills, California. But he's a Sonoma County resident living here in Pengrove.
Correct.
And kind of does business finance all around the state. So, Rich, thanks for being here. I think hopefully I got all those details right.
You did. You got the basics. Thanks, Dan. Good to be here.
Yeah, absolutely. So I want to learn more about you personally, but let's jump right into the topic of SBA financing and specifically real estate financing that is subsidized by the SBA. First of all, what is the SBA?
SBA, Small Business Administration, founded in 1953, a whole bunch of different aspects to the program. You see it in disaster relief and other aspects, but one of the core products is this SBA program for owner-occupied commercial real estate.
Okay, so it's for a business owner who operates the business.
Correct.
And it's the real estate that houses their business.
Correct.
Now, okay, so keep going. Tell us more about the SBA.
With the caveat that they need to occupy 51% of the space of the building.
Okay.
But pure and simple, the reason why this program exists is that the SBA wants small businesses to grow and help them in growing, and one of the key ingredients is capital, right? And as you know from your experience, if you go to a commercial bank for a real estate loan for your building, they're going to require 35 to 40% down payment.
Right.
With the SBA product, and there's several we'll talk about today, you can get in with 10% down.
Okay.
And so what that allows you to do, the small business, to maintain their capital so that they can grow and use that cash for that purpose.
So it provides the business a home, right?
Yep.
They have to have real estate to operate their business without tying up all the liquidity of the business and the business owner into that fixed asset, which is the real estate.
Correct.
Right. Okay. So the SBA is a federal agency.
Correct.
And it's administered
cabinet level.
It's like a big deal.
It's a big deal. And it's really interesting. When I started in this business in 1985, so I've been doing this for 36 years, started out in the field, calling on banks and real estate people here in the North Bay, actually, in San Francisco. The SBA reputation was lender of last resort, startup company type lending.
You can't get lending from anywhere else.
Go to the SBA.
Right. So when I was in business school, there's like the 4 F's when you're looking for financing. It's the founder, family, friends, and fools. So maybe that fell into the fools category of the SBA.
Yeah, basically, companies would go to their commercial banks for loans. The banks would say, no, we can't do it for various reasons. And SBA originally was basically the fail-safe, the alternative. Over the years, that definitely changed. And it's really interesting, the PPP program that
that's the Paycheck Protection Program that rolled out during COVID, so to keep businesses afloat that were suffering because of shutdowns. Okay.
That really brought the whole program onto a different stage where people were really, I think, on a national level aware of it. But I would say over the last 15 years or so in the commercial real estate market, the product really has become a predominant player.
Okay, so the SBA is the big umbrella, right?
Correct.
And there's a bunch of different programs that run through the SBA.
Correct.
And it's a cabinet level position that basically they get funds from the federal government to allocate to different types of programs.
Correct.
One of those programs specifically, or a couple of them,
SBA.
Relate to real
SBA
estate
and
financing.
commercial real estate in particular, which is, and just as a side note, there are other types of funding under the SBA program. There's business acquisition, working capital, tenant improvements, equipment purchase. We won't get into those today. Let's just strictly focus on real estate.
We're really focused on real estate on the show. So tell me about how the SBA helps owner-occupied real estate, the commercial real estate.
So again, 2 primary ways. Number one is leverage, or the fact that you can put down 10% and buy a building, versus the 35 to 40. The second thing is that typical conventional loans, as you know from your experience, have what's called a balloon payment. And so they might have a 25-year amortization, but there generally is a term or a payout period of 10 years.
So for the loan is spread out over 25 years.
Exactly.
So that's like 300 payments, right?
But at the end of 10 years, the loan is basically due and payable.
Okay, so after 10 years, you don't keep the same loan for the full 25-year term. The loan payment spread out over those 25 years, but you only have 10-year commitment from that bank, and then you have to do something.
Yeah, you either have to refinance it. Maybe the bank will refinance it themselves, or you as a business owner need to go out and find another bank to refinance it. And what that entails is you're at the whim of the financial condition of your company at that time.
Okay.
You have to do a new appraisal. You have to do a new environmental report, and you're subject to the interest rate environment at that point.
Okay.
With the SBA product, specifically the 504, when you obtain that loan, it's fully fixed for 25 years, and there's no balloon payments.
So how is that possible? So break it down. So 504 loan,
Yeah.
I'm the business owner.
Yeah.
I want to buy a building to operate. At least 51% of the building is going to be
Correct.
allocated to my business. The other 49 I can rent out and have rental income from
Correct.
another business owner, which is kind of cool. Break down the numbers. How so 10% of my equity goes in.
Yeah,
What
so-
happens after that?
So there's two SBA programs. There's one called a 7A and one called a 504.
Okay.
The SBA 504, which is in the Bay Area, is the predominant player.
And the 504 is just the code, like
It's a
it's like
code,
the
yeah.
form number that
Exactly.
you use. It's not that's all that really means. So there's identifying as a
Exactly.
product name is the 504 loan. Okay.
Yeah. So the 504, by definition, is a 50% first mortgage by a commercial bank like Harvest or any other banks in the Bay Area.
Got it.
The SBA provides a second mortgage of 40%, and that's a 25-year fully fixed rate.
What about the first? Is that fixed as well?
Yeah, the fix can also fix for 25 years. In fact, most of the loans I do with the 504 program are fully fixed for 25 years
So the
as well.
first is fixed for 25 years. That's done by one bank, and
Yes.
then the 40%
Is the
is the
SBA.
SBA portion,
Right.
also fixed for 25
Correct.
years. And those have the same interest rate
No,
or different rates?
So the interest rate for the bank first is based on the bank criteria. It's generally a function of the 10-year Treasury bill, let's say, plus an index. The SBA second is really interesting. It's called a debenture or a loan, and basically the SBA, after the loan is funded, goes to Wall Street once a month on the third Thursday of the month, and they pull all these loans together
Okay.
around the U.S., and whatever the interest rate is that day in the bond market is what the interest
What
rate
you get. So the
gets.
third Thursday
Yeah.
of the month, all the loans that were made from
from
the
the
day
la-
after the third Thursday last
Well,
month.
well, it's a little bit more complicated than that. It's generally about 30 to 45 days after the loan funds. So a bank like us, if we do a 504 loan, we do the first mortgage at closing, and we also do a bridge loan for the 40%. That's an interest-only loan to fund the deal, and then the SBA comes in more or less 45 days afterwards, and they pay off our loan with their loan.
Got it. Okay, so but the borrower at that point doesn't know exactly what the rate is on the
exactly.
second. There's a range that you give them.
Yeah, but but more or less you know that range, and so if you're a buyer, you can blend those two rates together and come up with what your effective rate is. And what I tell people is, if you want to go to bed at night and know what your payment is, as long as you're in that building, this is a great product to be
Right.
in.
So just to recap, so business owner buys $1 million building. Simple
Yep.
math. They're going to put $100,000 of their own
Correct.
money into it, or their business's money.
Correct.
40% is going to come from the SBA,
Right.
And or so 400,000, and then 500,000 from the commercial bank.
Correct.
That's doing okay. So basically, you have the commercial bank winds up with a loan on a building that's 50% loan to value.
Correct.
And the SBA has assumed the risk from the 40%
Correct.
debenture,
Yeah.
right? Which is that
Correct.
instrument. Okay, so that gives the bank a lot of confidence that worst case scenario,
Yeah.
they've got some equity from the business owner, and also a guarantee from the SBA that if this goes sideways
Yeah.
and the deal goes bad, they have to foreclose on the building, which is kind of the remedy.
Right.
That they only have 50 cents on the dollar
Yeah,
that they've
at risk.
have exposure.
Yeah.
That makes a lot of sense. And in return, the business owner doesn't have all their capital locked up in that. They've only got only $100,000 in that case.
You're right. They do. They have the 100,000, so that allows them to continue to use their working capital in their business
for business expansion, hiring people, inventory,
and that's the whole message for the program. Now, the other program, just briefly, is the 7A program, and that's a bank like our company, Harvest. We do one loan versus two. And that loan, it can be 10% down also, but it's only one loan. And in that particular case, the SBA guarantees basically 75% of the loan if there's a foreclosure. So that particular loan is variable rate versus fixed. So to many people, that's not as attractive, but it's a flexible underwriting standard. So in the practical reality is what I'll say are the stronger loans, if you will, typically go 504. If there's some issues in the company that we can deal with and it's still a legitimate opportunity for the company, then we do the 7A program.
So can you give us some examples? So you're here in Sonoma County and so for in the greater Bay Area, I've seen some of the marketing stuff, so I know that you have some permission from companies to talk about. Can you give us some examples of how you're helping local businesses with this type of thing? And how, like, some use cases of how you do this.
Yeah, so there's a company right down the street, Wine Spies, that I did a 504 loan with last year. And Wine Spies is an online retailer of wines. They've had tremendous growth over the last 2 to 3 years. And they found a building in Petaluma. They're right across the street from Lagunitas.
Okay.
And they were in between their financials. And so you as a banker remember that, when you do your cash flows, you use the last tax return as your baseline.
Right.
Well, their last tax return didn't support the new loan, but their interim financials did. And we could see the growth was there. All the other components were solid in the company, but they weren't quite ready for a paper, if you will, conventional loan.
Standard conventional loan from a community or local bank.
We actually, in that particular case, Harvest, we did that loan in our portfolio, and it just allowed them to continue to grow, and they're just doing incredibly well.
So they needed additional physical space
for inventory, for office setup.
So one of the limiting factors that maybe they were experiencing was they needed place to hold their inventory. They needed a place to actually perform their business. So now they've got that space, so they continue to grow, spurring the economy.
Yep.
And they don't have all their capital tied up in that building, and they own it, so they can't necessarily get kicked out by their landlord or have their rent change or anything like that. So, so in that case, did they do a 504 or 7A?
504. We did a 504.
Okay.
Yeah, and also they're doing podcasts like you're doing, and they have I haven't been over there recently, but they've set up a filming location, etc.
Cool. I'll have to go check that out.
Yeah, definitely. So there's one example of how the 504 program made a lot of sense, and they're locked in. They know they've got fixed rates, and they're off to the races.
So who else? Is it industry specific? Is it anybody who can use this product?
Yeah, I mean, it's not industry specific. Anybody can use it, if you will. Any legitimate company. There's certain companies that are not eligible, like nonprofit companies are ineligible. As an example, but yes, it's everything from hospitality, restaurants, what else? Industrial buildings. It's across the board.
Yeah, cool.
It really is.
Who else in the Bay Area? Any other success stories like that? Maybe different than the Wine Spies guys.
Yeah. So I mean, thankfully, I've been doing this 36 years. The last 24 years, I started out as a salesperson, went to senior management, and then came back into the business as a salesperson while we were growing a family about 23 years ago. So I've got quite a few companies. I've done about 300 of the 504 loans that we were mentioning. I just did a loan in San Jose for a company called Launderlux, and they are coin operated. And this is a great story. A coin-operated company that had 2 SBA loans already in place funding their growth up till the 504 loan I did. And they found a building in San Jose that there was a good opportunity for them, and we did that one with a 504 loan. So they had 3 SBA loans. You can go up to $5 million of SBA guarantee funds.
Oh, wow. Okay, and that's like of the 40% debenture.
Well, it's either if it's a 7A loan, you have the 75, and then
That makes a lot of sense. So, okay, so in that case, you can have multiple physical locations.
Yeah, you can do more than one. So the SBA guarantees up to $5 million in what we call guarantee funds. Right. And you can do that in a number of loans. So it can be 1, 2, 3.
Cool. That's really, I guess I didn't realize that you could do multiple locations and have that. So tell me a little bit more about, so you're enabling these companies to grow, right? Yeah. That's just a key factor for them to continue their growth and keep their working capital and probably meet the covenants. Covenants are rules that they have to follow in their other credit facilities by maintaining liquidity and having cash and all that other stuff. How else are you helping these businesses with their growth plans? Are you you're digging? You're not just there to dig into those one set of numbers. You go deeper into the relationship and kind of really understanding what their plans
we
are.
do, and you know, I've been fortunate because if you do this long enough, it rubs off on you, and you kind of see trends with different businesses. And so I see in my role, I'm almost a quasi-advisor to the company. I can see things that, from my experience with other companies, that I can identify for the folks and tell them, you know, you're going to do this growth. Have you accounted for equipment? Have you accounted for working capital? And so we you know, not necessarily a Wall Street type level, but we are analysts that really, you know, provide information to the companies that helps them to figure out, A, if they should buy the building, because that's part, you know, this is part of our analysis to figure out, can you afford it? And then the second thing is provide them feedback on their future.
I think it's really important because you're a local advisor who has access to these large, you know, like these large credit facilities, but you know the local people.
Yeah.
Right. You know how the economy works in the communities that you work in.
Yeah.
And I bet if you were to map out where those 300 deals are, there's probably a pattern there where you've worked with in the same types of communities where you can connect them with a CPA who knows how to help them. And you can connect them with other business owners that might be able to, you know, advise and help them kind of skip some steps and move forward quickly. And that's overall, that's a really positive thing for the Bay Area economy, right? So
absolutely. And I think, you know, what it is predominantly for my business, it's about performance. It's about getting the job done, so to speak, because there's a lot of pressure when you do these type of loans, not only for the company that's seeking to buy the building, but you've got a real estate broker on both ends, and they're commission-based, and so they want to make sure, and you have specific timelines you need to hit. So there are a lot of moving parts. But I've developed relationships in the North Bay with a number of real estate brokers I've worked with for 25 years, and so they rely on you to come through, to do the proper analysis up front, to make sure you deliver what the product you say you're going to deliver. And that's super important. Otherwise, you're not in business.
So if there's a business owner thinking about, hey, we should buy a building, or hey, it's kind of time, or maybe, you know, we need to move, we need some bigger space, and why not own it? What's the first step for them to get started on that?
Yeah, the
journey?
First step is provide me 3 years of tax returns, both business and personal, an interim statement for this year as current as possible, a personal financial statement so I can see why they look there, how they look there, and I run a credit report on them, and I can pre-qualify them in 24 hours.
Wow. So personal finance, what's included on that?
They're personal assets, personal cash, retirement funds, personal residence, as opposed to the company that has its separate, you know, entity.
Right. So when you're looking at that, you're analyzing not only the strength of the company, but also the wherewithal and the ability of the guarantor, of the business owner.
Exactly.
Because you overall are painting an overall picture. So if there's something that's like maybe not perfect necessarily with the business, like you said, interim financials, they're growing at a great clip, that's really positive. A compensating factor that might help credit approval is the financial stability and backing of the actual owner of the company.
Yeah, exactly.
Okay, got
so, and that's so important because when they're out looking at properties, sometimes we have people that haven't found a business or haven't found a building, and it's important that they don't waste their time looking. If they're looking at $4 million buildings and they can only afford $1 million, it's a waste of everybody's time.
For sure. No,
so
I think
that's something that I market. I mean, anybody that's credible in my business should provide a pre-qualification.
Very, very similar to what we do. You know, before we have our realtor partners go out there taking our clients shopping, we want to make sure they can actually afford what they're looking at. Otherwise, it's not maybe not a waste of their time because it helps them hone in on what they're really looking for. But, you know, they can't actually buy it. They don't get their hopes up. So, cool. What else should we know about your business and SBA financing in general?
Well, I think my business in particular, you know, I've always prided myself, and I have a bunch of testimonials to back me up that, it's performance. It really is. And this is a business where, in your business, at night you sometimes don't sleep, and you really sometimes you wonder, how am I going to get this done? But ultimately you get it done, and that's the proof in the pudding, and that's really what I promote.
I have a knack for like finding that solution at like 3:00 in the morning, where I'm like, I'm like, oh, I figured it out. I know how to do this now. And then I scribble it down and I can get a few hours of sleep. That's always nice.
Yeah.
But no. So working with a credible person.
Super important, because for many people that we work with, this is the biggest deal they've ever, for them, it's sustainability in their business. And so, we're looking at high interest rates today, right? Higher interest rates, although compared to what I've seen over my career, they're still very low, but people have been so spoiled, if you will, with low rates, as you know, for the last 15 years. We're now in a higher interest rate market, but the important thing in the owner-user market is that businesses still have to function, and businesses have leases that terminate. I just did a pretty good-sized transaction in Berkeley where the company's lease expired and they couldn't renew it because the owner was knocking the building down and going to do a development. You got to go.
Got to go somewhere.
Yeah, and so the owner-user market in particular is probably going to withstand these high interest rates because there's still a couple things at play. Number one is that example. Number two is there's still a supply and demand misfit in that there's more demand than supply, and that's been in the Bay Area, I think, since I've been doing this. There's more buyers than there are buildings available. That's especially true up here.
Do you think that, so there's some economic data coming out, maybe we're heading into a recession or at least a slowdown. Do you think that provides opportunity for an owner user to pick up real estate?
Yeah, I think it will. I think it provides an opportunity in a couple of ways. Number one, I think sellers are going to back off on their prices a little bit because they realize it's going to be a little more difficult to sell. And I think for companies that are doing well in this economy, and there are some that are definitely doing very well, it's going to be a great time to capitalize on that.
Right.
And as long as they can afford to make the payments, they're going to jump at those.
Yeah, if there's a business owner that maybe is on the fringe, maybe their business isn't doing great, it's kind of in that life cycle of decline, which happens as a normal cycle of business, that maybe this is the opportunity for them to sell and, change their business practice or close. And I think that will happen a bit, and that provides opportunity for new growing businesses that are in the uptick of that business life cycle. In the boom phase, even in a recession, and that probably provides a good opportunity for them to grow some roots and establish, which is really great for the local economy, right? They buy the building, they improve it, they invest in it, they put in equipment, they hire people. And
absolutely. There's a number of, FedEx, you always hear about FedEx, but there's so many companies that started out with SBA loans. One of the companies that we financed in the early days, it's called they're at Costco. They're coffee they do coffee beans, and they do French roast. And the name of the company right now is escaping me, but we did one of their first loans.
Right, and now they're
back in 1988.
Amazing,
and now they're huge. I can give you other examples.
Yeah.
So definitely these our loans provide companies opportunities to continue to expand, to continue to operate, because now they're not at the whim of a landlord in the change in the lease payment. And I did want to mention also, just particularly in this area, I've seen, because I was up here in the early days doing marketing, if you will, this market has really gotten strong for owner-occupied real estate and just business in general. We see that the business park that we're in right now in Petaluma, but you see it throughout the North Bay. I think business people have realized the advantages of being in Marin, Sonoma, Napa County. And I think also with the pandemic and companies becoming more mobile and employees seeing the opportunities to work locally, all of that I think is really a positive for our area.
Yeah, no, I think it's really good, and I would encourage any business owners out there that are maybe ready to make that leap and own the building that they're in, or buy a new building to move their business into, to reach out to you, and we'll make sure that we link up to you in the show notes and have your contact information there. Anything else that you want to add? Any advice that you want to give? What else should we know about you?
Yeah. Well, I think I've covered the main points. I mean, I have a strong. I think if when you're looking, if you're a buyer and you're looking at it, whether it's me or any other lender, I think the important things for people to do, as is the case in your business, look at the institution, look at their commitment to small business, and look at the go to references for that individual. And if an individual can't provide you with references and backup, then I would be cautious.
Right. Make sure you're working with qualified professionals.
Work with people that know what they're doing, because this is just not. It's not to say that amateurs can't do this, but it's a big deal, and you want to, as much as possible, I think, work with somebody that has the skill set, has the network in place to do it.
And on that note, if they're out of the area,
and
they're looking for some advice, you can give them some advice, but then refer them to someone in their local market.
Although I can go anywhere in the United States.
Got it.
I mean, primarily my business is here in the North Bay, but I still do a lot of work on the peninsula, Silicon Valley, throughout the East Bay. I just closed 2 deals in the East Bay. So, I can, and if I can't help somebody on a national level, I have business associates with other SBA lenders that I've known over the years that I can refer people to.
Love it. Very cool. Rich, really appreciate you coming in. Thank you for telling us more about these programs. It's a really important part of the overall economy that probably people don't know that exists, that a lot of buildings in town are probably using these types of instruments to help the local economy. And I really appreciate you doing that for the community, and also for sharing your wisdom with us. And really appreciate you coming in.
Yeah, thanks a lot. Good to see you. Okay.
Stay up to date with Bay Area real estate. Hit subscribe now if you haven't already. Did you enjoy this episode? We love reviews in the Apple Podcasts app. We'll read yours on the show. This is By the Bay.